Welcome to Chapter 3, Handling the Money. Chapter 3 is important because handling and managing escrow funds is a major responsibility of the sponsoring or managing broker. The Real Estate License Act has all of the information. You can get a copy of the Illinois License Act, 2000, which we simply refer to as the Act, at idfpr.com. I will tell you it's a little hard to find when you get to idfpr.com to track down a copy of the License Act. But I do bring that up there because it is important for you as a managing broker to have a copy of the License Act in your office. Just as we said in the earlier chapter, you need a policy and procedure manual, and you need accounting, accounting packages, and you need to do business plans. You need to have all those things as documents. You need to have as one of the documents sitting in your office a copy of that, and you can copy them for free from the IDFPR website. If you'll give me a call, I can get you a nice bound copy. I think they're 10 or 15 bucks per. If you can't seem to find it or you want something that looks a little nicer, get to me and we'll get you a nicer copy of it. But do have a copy of the License Act in your office, please. Misuse, mishandling of earnest money, escrow funds, I should say, broader, is the #1 disciplinary violation of the Illinois License Act by Illinois managing brokers. It's the #1 thing they get in trouble for. So let's go through this chapter as thoroughly as we can. And let's recognize how important this chapter is. And let's also, make me a promise that when we're all done with this course here, you'll go back through this chapter, and if you haven't done so already, you'll read it line by line by line. I'm going to cover enough of it to get you through your end of chapter exam, and I'll get through this so that you have enough knowledge of this to be able to pass your final exam. But it's very, very important, and I'm not going to be covering this line by line by line, but giving you some highlights and some important, what I think are the more important concepts in this chapter. So do get a copy of that act. Make sure that you've read this chapter, line by line when you get a chance. Escrow funds are considered monies, promissory notes, security deposits held by a broker for the benefit of the parties to the real estate transaction. When we say monies, we're primarily talking about earnest money. So the two big categories of escrow funds are earnest monies and found in real estate brokerage transactions, sales transactions, and security deposits funds that we find in leasing transactions. Earnest monies, typically these are monies that the buyer gives as part of his earnestness, if you will, in a real estate transaction. Earnest money is customary. It is not required. So you may in fact have a real estate sales transaction that doesn't have earnest money. Often they do. And if your real estate transaction does include earnest money as part of the transaction terms between the seller and the buyer, then you, Mr. Broker, are going to then have to handle these earnest monies as escrow funds. Security deposits, of course, are monies that tenants typically are giving to brokers to hold on behalf of their client, the investor or the owner of the property, contingent upon return of that money if the tenant hasn't met some of the terms of the lease. Typically, we're talking about paying all their rent, and typically about leaving the property in good condition. So those would be security deposits. Now, we do want to say that in some cases, property owners, might want to hold their own security deposit. So therefore, the property manager representing the property owner would not be encumbered by these rules for security deposits, as the property owner can hold monies themselves. This should be delineated in the employment agreement between the property owner and the property manager in writing, that the property owner will hold security deposits on his own behalf, and therefore the property manager is exonerated, if you will, from having to follow the rules and regulations of administration of the security deposits into his escrow funds. Broadly speaking, any funds that a real estate broker gets into his possession on behalf of another unless it strictly states that it is not going to be escrow funds, like rent, would be considered escrow funds. But as I said in our first discussion here, primarily we're talking about earnest money and security deposits. With escrow accounts, we have a couple of basic rules that we want to review. With escrow accounts, you don't have to have one as a sponsoring broker or managing broker. You may in fact not be holding security deposits, or you may in fact not be holding earnest monies. And if that's the case, then you don't have to have escrow funds. We'll talk about this more in just a second. If you do hold security deposits or earnest monies, you are in fact holding these things defined as escrow funds. You need to put them in an FDIC insured account. That would be the Federal Deposit Insurance Corporation insured account on a federally regulated depository. These federally related depositories then, if you put monies in there, they're going to be insured by the FDIC. That's going to protect you. It's going to protect your clients. The only caveat here is some of these FDIC insured accounts have thresholds above which they will not insure. Typically, I think it's $200,000 now. So if you have an FDIC insured account, escrow account, and you are holding over $200,000 in escrow funds, you may want to open up another one to continue putting funds in so that they're also insured. Another $200,000 account, if you will, insured account. Only sponsoring managing brokers can have accounts. Licensed brokers cannot only not have accounts, they can't be signatories on accounts either. Only the sponsoring managing brokers are responsible for escrow accounts. The consent to examine form, we have that highlighted because if you ever decide that you want to hold escrow accounts, earnest money security accounts, you have to let the department know. And that is done through a form called a consent to examine form. And I think we see that form on figure 3.1. So don't just go out and start opening up escrow accounts until you notify the department by completing that consent to examine form. Notice number 3 on that form are the signatories. And those signatories should be the managing broker or brokers that are allowed to put monies in or take monies out. These should be non-interest bearing accounts. Now you can hold earnest money, escrow funds, security deposits in an interest bearing account, but both parties have to give permission. Sellers and buyers, or landlords and tenants must give permission to put it in an earnest money account. And I would also say that in that permission slip that you're given by those parties, you should indicate who will be getting the interest on these escrow funds held in interest-bearing accounts. Your escrow account records must be kept for a minimum of 5 years. And to put a little sharper point on that, 2 of the last 3 years must be on site. So you can hold all 5 years on site, all your escrow records for 5 years, or just the last 2, and the other 3 you can be moved off site. And just on the side too, as far as your records, they don't have to be your accounting records we're going to be talking about don't have to be done by sophisticated computer technology or by QuickBooks, Quicken types of programs. You can do it by pieces of paper as long as they're done correctly. You don't have to have the more sophisticated accounting systems, accounting software. Good idea perhaps, but you don't have to have it. But you do have to have these records available for the department the last 2 years. If they walk in your door, they're going to want to see the last 2 years of your escrow accounts right there in your office facility. A couple words we need to know: commingling conversion. Commingling is where a broker mixes his own personal or business money with his escrow account. Conversion is when the broker takes out money from the escrow account and spends it for whatever needs he might have. Now, there is an exception. The broker can put his money into an escrow account, but only enough to maintain or keep the account. He might need to put money in to keep a minimum amount into the account to keep it active. He might need to put his own money in order to maybe purchase checks, more checks for the escrow account. And we'll show you how you account for that in a second. But you don't put your own personal money in, and you never take money out for your own personal use. Money is only taken out to be dispersed according to the contract. So if you do take money out, that is money that is due you on a commission, it's only with the permission of the client. So you never take money out unless you're given permission to take it out by the parties to the transaction. Branch offices can have escrow accounts. They can hold them themselves, or they can send them to the main office. They can't put their branch escrow accounts into another branch office's escrow account. So if you have branch offices, they can have their own branch office escrow account, or they can take their escrow monies and take them over and put them in the main office escrow account. And we'll do that, and we put those funds in the next business day the contract is completed. We'll talk about that in a little bit. It's not necessarily when you receive the security deposit or when you receive the earnest money. It's when the transaction is consummated, comes together, and we'll talk about that. Basically, it means when you got to have a written sales contract or you have a written lease. That's when the contract's consummated. One day after that is when the trigger date to put it in your escrow accounts. And of course, you're going to keep records of your escrow accounts. Sometimes I'll ask our students this question: to whom does the earnest money belong? Does the earnest money belong to the seller, to the buyer, or to the broker? And our answer, of course, is none of the above. The earnest money belongs to the contract. And what we mean by that is we don't know who's going to get the earnest money, seller or buyer. We don't know when they're going to get it. We don't know how much should be dispersed. We don't know any of this until we have a contract that tells us this. And that contract is going to be the sales contract, or the contract's going to be the lease contract. And that will tell us what we do with the earnest money and when we can disperse it, and when, if any time, we would reimburse the parties. And basically, we're not going to do anything with earnest money unless we have permission of the parties to set it up, to start it, and we're not going to disperse any of the earnest money unless we have permission from both parties to disperse it. So the earnest money belongs to the contract. That's going to tell us what we do with the earnest money. And we don't interpret the contract, incidentally. We'll have our lawyer, we'll have sellers or buyer's lawyer discuss their understanding of the terms involving earnest money. And then, having written permission from both parties, we'll then follow their wishes. Time of deposit, we said the next business day of the transaction. Disbursement according to the contract, or earlier than the day it's consummated, or later the day after receipt to disperse. So according as far as disbursement of earnest money, it's no earlier than the day of closing or later than the day after your receipt to disperse. Typically it's the day of closing. You've gotten the receipt to do that, and then you would disperse it the day after closing. Or if there was a dispute between the parties and you had a letter to disperse the earnest money, you'd have a day after receipt of that letter giving both parties giving you permission to disperse the earnest money. Now, with short sales and foreclosures, after the transaction is after the lender approves the price. So we're going to talk a little bit about short sales and foreclosures as far as how that affects escrow. Short sales, not so much. In short sales, the seller is signing a contract just like in a regular deal, even though they might be waiting for permission for the deal from the lender. In a short sale, when a seller gives you earnest money, it goes immediately into your escrow account. Not true with foreclosures. With foreclosures, now the lender owns the property, not the seller. The lender is in title now. With foreclosures, the earnest money goes into an escrow account when the lender gives you permission, when the lender signs the contract. If there's a dispute between the parties and they're asking for disbursement of the earnest money, you will not disperse it until both parties agree. Now, what happens if both parties don't agree? Then we would hold the money until the dispute was settled by a court, and a court would give us an order to disperse. If that's not going to happen, or if that looks like it's a long process, and we don't want to be involved in it, we can go to the state treasurer. The state treasurer will actually hold earnest money for the dispute and get us off our books. The other thing a broker can do is file an interpleader. Basically, it's a request from the court to hold, and you can get it off your desk. Let's face it, as real estate brokers, your job is to bring buyers and sellers together, landlords and tenants together. It's not to be a referee in an earnest money dispute. Good advice: before you do dispute, consult with your office's legal counsel, just to protect yourself one more time. Just talking about there are a number of rules, and of course I'm not going through all of those. As important as they are, there's 13 of them. So for the final exam in this course, it would be a good idea to maybe review all of those account rules. I'm going to be doing many of those as I'm going through our lecture here now. That's a nice little summary of what we're talking about with this chapter, but you might want to look through it one more time just in case I've skipped over something or haven't covered it thoroughly. But I think you'll find that as you read that through, I'll have covered that summary with you pretty well. Escrow records. How do you maintain your records? Well, you've got to maintain your escrow records in a certain way that the department requires. So the earnest money actually has a recommended bookkeeping system for you. And as I said, it can be done by paper and by regular accounting processes. It doesn't have to be done by computer. As long as you have these documents, here's what's important. You'll see a journal on page 58. The journal is basically kind of like your checkbook. It's all the monies that go in and all the monies that come out, sort of in date order. You'll see a ledger card. You need to have one of those. A ledger card on page 59. Basically, ledger cards are per each transaction. So you'll take your journal and you'll list all the monies going in and going out. The ledger card will split off all of those entries into each deal that you're doing. So each deal, we can see the money that went in and when the money came out, if there's any balances left. On page 61, we have a monthly reconciliation. So on at the end of each month, we're going to get our bank statements. We have 10 days to reconcile. We have 10 days to do that form on page 61 from the time we get our banking records. And basically what the monthly reconciliation is, it's balancing our journal and our ledger card, and it's also balancing any monies that we as brokers might be putting in and putting out. One of the things we don't have here is page 60, which is the sample ledger card for brokers. This is the monies that brokers might put in. Remember we said that brokers can put their own personal monies in, but only enough to maintain the account? Well, when you do that, Mr. Broker, here's your reconciliation form, if you will, your ledger form. So all of this stuff will appear on our page 61 monthly reconciliation. So we've perfectly balanced and we've accounted for every nickel that's gone into our escrow account, from the ledger from the journal to each of the ledger cards, each of the deals, to each of the dollars that the brokers put in, and we've balanced it against what our monthly bank statement that we've got from the bank. And our last form is called the master account log, not logo, but log, and that's found on page 63. What that is the document that will tell the real estate department where our accounts are, by name of institution, by the address of institution, and by the description of what that escrow account is. And then it'll also give account numbers. And of course, what that form really is for their edification, that if they want to investigate your records, they simply take your master account logo and they know log, and they know exactly where your accounts are, and they can go in and investigate each of the accounts that you have. So this is basically a form for the department to know where your monies are at. You see our red arrows, so we definitely want to know all about these accounting statements that we need to account for. Just on the side, compensation. Any compensation that we get must be disclosed to the client in writing. Actually, it must be disclosed prior to our receiving compensation. So what that means is, when we're representing sellers or representing buyers, sometimes we get compensated by buyers. If we're representing property owners or we're representing tenants, any compensation we receive in the deal, we must disclose to our clients in writing before we do that. Typically, we have this disclosure in these agreements that we have, either our listing agreement, our buyer brokerage agreement, our property management agreement, our tenant rep agreement. That's where we disclose to our clients how we're getting paid. Sponsoring brokers, then, when it's time to make payments, sponsoring brokers can only pay their licensees. That is, other managing brokers that work for us, or obviously the brokers that work for us, any residential leasing agents that work for us, or any licensed sales assistants. Those are the people that we are duty bound or we're able to pay in a real estate transaction. Unlicensed sales assistants can be paid by either the sponsoring broker or by the licensing they are working for. So if you're, sometimes you see these teams where we'll have a licensed broker and they have sort of an administrative assistant, if you will, an unlicensed assistant, and they might pay them to do administrative, secretarial, clerical kinds of activities. Those unlicensed assistants can't engage in licensed activities now. If they do, they're going to be, in the unauthorized practice of real estate. So, if you as a licensee, a broker, are busy enough that you have hired your own sales assistant, make sure if they're an unlicensed assistant, they're only doing clerical duties. They can't be doing any kind of marketing duties, or if I could better define it as dealing directly with clients and customers, as far as showing property, negotiating, writing contracts, helping them negotiate contracts, those kinds of things. Unlicensed assistants can't do that. And later in this course, I'm going to give you a whole list of things that unlicensed assistants can do and unlicensed assistants can't do. We'll talk about that in another chapter. Our sponsoring brokers can also pay other sponsoring brokers. In other words, they can pay cooperating brokers. And those cooperating sponsoring brokers would then pay their licensed brokers. Our sponsoring brokers can pay licensees, corporations. In Illinois now, if I'm a sponsoring broker and you're my broker, If you want to, you can actually incorporate as your own corporation, not as a real estate corporation, but as a corporation under your name, if you will, or doing business as corporation, so that I can pay that corporation directly on your behalf. Some licensees would rather receive their compensation as a corporation versus being a individual. That's something that you and your accountant should sit down and think. But in Illinois, it is permissible for me as a sponsoring broker to pay the licensee's quote corporation. They're not, as I said, a real estate corporation, okay, but they can be corporate in nature, corporate form of an entity. It would be a corporate entity. Compensation disclosure. Clients, as we said, must be told in writing of commission sources and/or splits prior to receiving compensation. Typically, these are done in your employment contracts with your clients or individuals you might be representing. If you get any referrals from where you have greater than 1% interest, that's any referral fee. We call these ABAs affiliated business arrangement disclosures. Page 65 will show you one of those forms, figure 3.9. So you can get referrals fees from entities where you have an ownership interest. These affiliated business arrangements that you have, but you must give these disclosures so that your clients see that you've referred them to an entity of which you're going to be actually getting some compensation from. This would be something similar to perhaps as a broker might refer a seller client to a title insurance company that might be part of their ownership of their brokerage company. There are times when you can offer compensation to an unlicensed party of the transaction. Okay, and this is something that's a kind of a real tacky area, something I'd be very careful of, because this compensation really should not be in the form of commissions that you're receiving. So if you wanted to offer a buyer some compensation for working with you or for doing business with you, you'd probably be allowed to do it. But it's an area of the license law that you probably want to look closely into before you start giving fees to your clients.